Kevin Kelly is back with us, the co-founder and CEO at Delphi Digital. So, Kev, the big important question that we talked about last time, which I think continues, is whether or not Bitcoin trades like risk or if it trades like store value. What are we learning?
Yeah, and thanks for having me back. And really quick, before we get into this, I have to give a quick big birthday shout out to you, Oliver. Known you for a long time now, and I know there's no better way you'd rather spend it than talking market. So happy to be a part of it.
Only talking Bitcoin. That's the only way to make the birthday better.
Bitcoin, exactly.
I appreciate it, Kev.
But no, to your point, I mean, you're certainly seeing kind of the shorter term correlation between Bitcoin and gold, to your point, break down earlier this week, really over the last couple of weeks. There's a couple of different factors that go on there. I mean, again, we've kind of harped on this smaller liquid supply of Bitcoin that's actually exchanging hands versus the long-term kind of accumulation patterns that we continue to see when we break out that UTXO analysis that we've featured on the show before. So that's kind of one of the things where, it doesn't take a ton of buying or selling pressure to really kind of move this market, right? That's not really news to anybody at this point. But I think it is really interesting to your other point about, if it's a risk on or more risk off asset, I think it is still too early to call it certainly a safe haven, right? Even though the fact that, it did trade, pretty closely with gold since really late May, taking that out of context, I think would be a little bit too early to do, as well as saying that, maybe it's not something that will trade like gold just because, over the last week or 2 weeks that relationship is broken down too. So, to your point, I mean, definitely a couple indicators that we're watching that we can certainly go through, but I think it's just pretty fascinating to your point that, you do see it tend to be uncorrelated with gold and stocks over different kind of time periods.
So I like this, Kevin, because again, the correlation got real high for about a month and a half there. Now it's on the last 30 days down to like 0.2, but it got up to 0.88 at one point there. So for Bitcoin, right, I think, again, a lot of people kind of miss the nuance because it requires a lot of nuance. It requires a little bit of a belief, but basically it is speculation on a store of value that becomes more useful with a certain series of events that plays out. What I thought was interesting is that, at least from my perspective, you guys basically called a call option on its potential as a store of value. I didn't think we got a whole lot of updates to that series of events. I mean, in terms of central bank, direction, in terms of other currency wars, I guess that held off a little bit this week. We made some trade progress. Did that maybe play a role in Bitcoin's softness?
Yeah, I think, again, and some of it, quite simply might be, a bit of profit taking because, again, you've had this pretty tremendous run up and reversal this year compared to that Q4 sell-off back, at the end of 2018, right? Bitcoin still, even with, its recent weakness, is still one of the best performing assets globally year to date, right? Again, it hasn't made new highs. It's, got close to or just under that 14,000 level, but certainly hasn't broken above, 19, 20,000 yet this year. But I think that could be also kind of playing into it in the shorter time frame where you had some of that kind of momentum kind of deflate out of Bitcoin's price, started to drop a little bit. It's held, from a technical standpoint, it's held pretty well above that psychological $10,000 level. It dipped really closely to 9,500, earlier this week, but really has seen some strong buying support in that range. I think if you do get a dip below, 95, maybe even 9,000, you could see some further weakness there. But from a technical standpoint, I mean, things still look, relatively okay. Okay,
now this is a really important point. I'm glad you brought up the profit-taking element as well, because, at a certain point, I've kind of been thinking lately that, maybe it's just time to sit back and watch this thing. I mean, and not to, discredit you guys, do really good analysis on the technical part of the market and who's buying and, what kind of holder they are. And I think that's really important because from my perspective, it's like price action will tell us, I guess, at a certain point, whether there's more speculators or more store of value believers, right? Because that's the question is, will enough people believe in it as a store of value, just like gold, came to be over generation and millennia. So what has your guys' research told you in terms of maybe who is the one who's most prone to dump around the 10,000 levels? How many of those people are still there? How many people are holding bags and they don't want to get rid of it at a low price? Because when you say it breaks through 10 or 95 and maybe we get trouble, those are the people that I think about.
Yeah, no, it's definitely a good point. And again, that accumulation pattern that we've continued to see that started, late last year and into the beginning of this year, we continue to see that trending higher, or at least plateauing. We haven't seen real, kind of selling pressure from some of those longer term holders, right? Which is one of the reasons why we came out in December and said that we thought capitulation was finally kind of coming into this market for Bitcoin, because you saw actually a lot of those longer term holders sell out right in Q4. And that was one of the big reasons why you saw that final kind of leg down towards the end of last year. To your point, I mean, who's the incremental buyer or seller? I mean, obviously, when you compare it to something like gold or more liquid asset class, or more mature asset class, I mean, the incremental buyer and seller is going to be much, much different. We've talked about institutions coming into this market, and again, they're starting to wade in. And what's nice is that I think as this kind of macro store of value, really more so uncorrelated, speculative asset is probably a better way to kind of classify Bitcoin, at this juncture. It has kind of served some of those purposes, right? So if you're looking at this from a portfolio management standpoint, and you're looking at it against, a multi-asset portfolio, there are certain times, again, to what we were talking about earlier, where it does trade as more of kind of a risk-on asset, right? Because it is still very small market value. It's still very kind of, emerging technology. It's very speculative. But at the same time, there's times when it holds up well, when there's, rising geopolitical tensions and risks, and you see stocks sell off, and it trades more in line with gold, right? Mm-hmm. So I think kind of, the store of value / safe haven assets a little too early to call right now. But the macro backdrop, as you continue to see, central banks kind of racing to the bottom, and you continue to see more and more totals in terms of negative yielding debt stack up, the opportunity cost in just looking at something like holding Bitcoin or gold, certainly I think will become more attractive as we, if this trend, in monetary policy globally continues.
This is really important too, because we just had a whole macro discussion in our week review on the panel about how strong the consensus is, Kevin, about that macro backdrop right now. I've never seen anything like it, where every person I talk to, they differ on what they want to hold, but they all see the same series of events happening. It seems like there's no stronger consensus than multiple cuts by the Fed, race to the bottom for negative yielding assets as well as interest rates, possible currency debasement on top of it, which gets into more of the crypto stuff in gold than it does bonds and stocks. But to me, everything is basically on this Fed kind of fulcrum, and it seems that Bitcoin is the one with the most leverage to it. Do you think that means, if there's disappointment on that narrative, that Bitcoin's in trouble?
I certainly think that it could, right? Again, if you're thinking about, those institutions coming in and where else they could put their capital. I mean, it's actually one of the things that we've been digging into, further as well, is because we're trying to figure out exactly what kind of consensus is in general in the macro environment. And I totally agree. Everybody, we've talked to, it seems like, we're almost preaching to the choir now, which is interesting because, again, 6 months ago, the narrative for Bitcoin was much, much different.
I agree.
The kind of global macro hedge is a narrative that's evolved. And no, it's definitely something that a lot of people are kind of on board for. So you have to question what's really priced into this market.
I'm gonna go even crazier here, because it's Friday at 3:45, and as you said, it's my birthday. I'm gonna throw something out there. By the logic of Bitcoin being the most levered to this series of macro events, it's almost like, as you say, the Bitcoin people talked about this 6 months, a year ago, and were thought of as being crazy. But now it's the consensus view. I wonder, in this way, it almost makes sense to me that Bitcoin, ironically, might be some kind of leading indicator. And again, traditional people that are going to watch it and go, you've lost your mind. But if you think about the Fed fulcrum, where stocks are positioned to it, bonds are positioned to it, gold's positioned to it, if Bitcoin's the most positioned to it, it might tell us which way this thing is going to break for central bank policy.
No, I mean, it certainly could, right? And there's no real kind of historical precedent going through, kind of a rate cutting cycle to prove or disprove that, which I think is both fascinating, but also raises a lot of questions.
Yeah.
I think what's also interesting too is when you look at kind of again, going back to the incremental buyer of, Bitcoin versus something like gold, there is, an entire market of potential participants or buyers that is certainly cut off or mandated from not even owning this type of asset right now, right? So it's a little bit different when you're trying to compare what the potential, I guess, buying power or pressure would be, or demand would be, for something like gold versus Bitcoin. Because again, as these products become more institutionalized, as more institutions come into this market and they start to get exposure to this, that's going to create kind of a new wave of buyers that wouldn't have otherwise been there, today or 6 months ago.
Yeah, hey Kevin, real quickly, before I let you go, it's a good conversation. When it comes down to technicals and charts, what do you guys look at? I know you're looking at the 50 and 200-day moving average. Are there important levels that traders should be looking at in Bitcoin over the coming weeks?
Yeah, definitely. As I mentioned, I think that 9,500 level is one that we're watching really closely. I mean, we put out a note earlier this week talking Bitcoin is right around 10.2, and it was flirting and fell below that 50-day moving average. And historically, it has not done well in the subsequent 14 and 30 days after that. And so we said, look for that 100-day moving average to be kind of the next support level, which so far it's pretty much bounced off of and held. But if there's a real kind of significant break before that, below that 100-day moving average, then that's certainly something that we think could trigger, further weakness in the price.
All right, nice work, Kevin. Always a good chat, very analytical, and we'll find out. Watch the price action. Kevin Kelly is a co-founder and CEO at Delphi Digital.